How will crypto be affected by the recession? Will the current economic downturn have a huge impact on cryptocurrency? With the recent recession, many people are wondering how crypto will be affected. If you're one of them, then you've come to the right channel. Luckily for you, Crypto Clipper, this video answers the question, will crypto be affected by the recession? By analyzing how crypto will be affected by the recession and then breaks down what this means for the future of cryptocurrency. How will Bitcoin and crypto be affected by the economic recession? The United States and the rest of the world's economy are extremely vulnerable to an impending recession or perhaps a stagflation as global inflation continues to rise to new highs each month and the Federal Reserve and central banks adopt a more hawkish stance. The cryptocurrency markets and Bitcoin may see completely different outcomes from one another if predictions come true and the world economy experiences a big recession as early as next year. How does this affect the Bitcoin and cryptocurrency markets? Cryptocurrency markets are currently changing in unison with the price of stocks and bonds as never before. The correlation between key US stock indices and cryptocurrencies over the past 3 months has reportedly hit its greatest level last week, according to Dow Jones market data. When markets move in lockstep, the correlation between them is 1, but when it's 0, there is no relationship. Into the Block, a market intelligence tool, reports that the correlation between the stock market and cryptocurrency is currently at an all-time high of 0.9. The correlation between cryptocurrencies and the S&P 500 is more than 3 times higher now than it was from 2019 to 2021 on average. This means that when investors sell in a declining market, all macroeconomic factors that typically have an impact on stock markets will have the same impact on all digital assets. The rest of the cryptocurrency industry must be distinguished from Bitcoin though, a different kettle of fish. The bulk of smart contract blockchain projects as well as numerous other cryptocurrency projects are funded by venture capital and institutional investors. These blockchains are created and introduced by registered businesses, many of which are located offshore. All of these businesses have marketing budgets, tokens allotted to teams and foundations, grant pools, head offices, founders, CEOs, CFOs, and COOs, among other things. In essence, these are private software firms that adhere to ESG business practices while developing decentralized blockchains as their main product or service. The objective is the same, but some are more effective than others to offer a decentralized blockchain with smart contracts. How decentralized are they? Even though some well-known smart chains include a significant number of widely dispersed nodes that make up the blockchain, they are not decentralized in other aspects. The vast majority rely on a limited group of people and organizations to create and manage the blockchain and are not decentralized at the team or developer level. The project at question is Ethereum, whose development is primarily centralized in line with the goals of its founder, Vitalik Buterin, who has the power to steer the initiative in the direction he chooses, such as with Ethereum's difficulty bomb. Furthermore, there is no established procedure for obtaining community approval of protocol revisions. Infura, or AWS's cloud computing services, are examples of central organizations that are relied upon to operate, interact with decentralized applications, or store the entirety of a transaction history. Other forms of centralization can be seen at the initial coin allocation, governance, or infrastructure levels. One such incident involved MetaMask, a non-custodial wallet provider that was supposed to be decentralized, and it happened in March of last year. Investors and bear markets. Investors exhibit herd behavior while making financial decisions. According to the discipline of behavioral finance, a branch of behavioral economics, and they tend to favor risky assets during bad markets, according to Geldorf and Keskitalo, Stockholm School of Economics, November 2009. As a result, during a bear market, organizations that sponsor the majority of blockchain projects may dramatically reduce their funding, investments, or completely forgo some initiatives, which will have a huge impact on the cryptocurrency markets. During the dot-com boom, we saw a similar pattern of behavior with internet stocks. No matter its value, many investors were prepared to fund any dot-com firm. Venture financing was easy to come by, and investment banks, which made good money from IPOs, encouraged speculating and accelerated the development of new technologies. Institutional investors withdrew their funds during the dot-com bust, which led to the bankruptcy of many companies and the 80% market value decline of those that did not survive, including Cisco and Amazon. Blockchains that support smart contracts haven't yet become widely used. Similar to early tech equities, the DeFi, blockchain gaming, metaverse, health on-chain, move-to-earn and NFT sectors all require more innovation and development to increase adoption and subsequently value across the crypto markets. As additional use cases and fresh, creative applications are created, the market for cryptocurrencies may therefore recover. This might take years, especially if recent economic crisis and stagflation are anything like the 1970s. It must be mentioned that several of these blockchains for smart contracts have enormous promise. A staggering amount of innovation has already been accomplished, and as crypto tokens mature and take on their own distinct features, it's possible that in the long run, we will observe a decoupling of crypto assets from the tech equities. Bitcoin, on the other hand, is a different kettle of fish. Bitcoin, yes, like other cryptocurrencies, Bitcoin is tied to stock markets and is likely to face intense selling pressure, but we think this will only last a short while. Principles of the Anna Karenina. The Anna Karenina concept, which is based on the first sentence of Leo Tolstoy's novel Anna Karenina, all happy families are all the same. Each miserable family is unhappy in its own manner, is used to analyze financial markets. Bull markets, in essence, seem to have a number of traits. Everything prospers, central banks are on board, feelings are positive, and money is flowing. In contrast, every asset seems to be unhappy in a down market in a different way. In our opinion, Bitcoin will rebound more quickly and will follow its own set of laws. The justification is straightforward. Bitcoin is a public good, a decentralized payment network that relies on energy instead of human judgment, where everyone may occur on its ledger and historical transaction data, and a real democratization and decentralization of money. Bitcoin as the payment network. The most secure and rapidly expanding payment network in the world is Bitcoin. Transaction volumes had increased by nearly 100% annually over the previous 5 years by the end of 2021, according to G. Cipollaro, E. Kochav, NY Dig, January 2022. Since the beginning of time, humans have traded with one another, and they will do so for thousands of years to come. Over the past 10,000 years, money has taken on a variety of different physical forms, from cows and cowrie shells to the computerized cash we use today. Trade will continue as long as people are alive, and despite being just 13 years old, Bitcoin is the fastest growing alternative currency, having been recognized as legal tender in 2 different countries. The Lightning Network. On top of Bitcoin, the Lightning Network is a payment technology. Instantaneous high-volume micropayments between users are made using this decentralized method. It's conceivably the highest tool for figuring out how effectively Bitcoin is being used as a payment network to pay for actual goods and services rather than merely trading, as well as how actively this usage is occurring. Compared to 100,000 users in August 2021, the number of users with access to the Bitcoin Lightning Network is now anticipated to be over 80 million. According to Arcane Research, Lightning Network completed over 1 million payments in the first 2 months of 2022, with a roughly $45 million payment volume, a 410% YOY rise. The distribution of all these payments are as follows. Merchant payment and gift card is 19%. Trading deposit/withdrawal is 32%. Private payments is 48%. Other is 1%. By dissecting Lightning Network transactions, we are able to comprehend them better. About half of the total payment volume is exchanged directly between people in the first 2 months of 2022. These payments can be used for a number of things, such as sending money to relatives who live abroad, borrowing or lending money to friends, buying goods from neighbors, and so on. 20% of the payments were made for products or services that were either directly purchased using gift cards or indirectly purchased through a payment processor. The use case for Bitcoin as a payment network is strengthened because the bulk of Lightning Network transactions reflect payments with real economic value, such as paying for products and services. Bitcoin has the highest adoption, both in terms of market valuation and the number of users. Bitcoin continues to hold the majority of the cryptocurrency market. According to research by Crypto.com, as of 2022, over 176 million out of 295 million global crypto users, or slightly under 60%, own Bitcoin, while just about 23 million, or under 8%, own Ethereum. The number of people who possess Bitcoin did not change despite the market value of Bitcoin declining, as seen by the sliding BTC dominance below 40% from November to December 2021. Bitcoin is more commonly used by new cryptocurrency users than Ethereum or any other cryptocurrency. The report states that from 128 million users in July to 176 million users in December, there were 37.5% more Bitcoin users in the second half of 2021. Ethereum, on the other hand, only had a 1.4% rise in users over this time. Even though smart contract blockchains like Ethereum have demonstrated significant innovation with DeFi, games, and NFTs, much more time is required for a global adoption, in contrast to Bitcoin, which has proven real-world use case, a secure, reliable payment network used by millions of people worldwide. Quality over quantity. Despite the fact that smart contract blockchains like Solana and Ethereum have processed much more transactions than the Bitcoin network, the majority of these transactions are of marginal economic value. As an illustration, mining pools, which are groups of cryptocurrency mining devices, share portions of the coins they mine among themselves, resulting in thousands of transactions on a blockchain. These have no worth in terms of money. Another illustration is spam, which significantly contributes to the increase in transaction volumes. Particularly with Ethereum, whose network supports hundreds of tokens, this is true. According to Bloomberg Research, 19% of Ethereum's non-economic value comes from spam. 98% of Cardano's total transactions, according to Coinmetrics, are useless. Another analytic business, Elementus Incorporated, discovered that non-economic exchanges like spam account for 45% of transactions on the Ethereum network. An actual economic transaction volume for Ethereum of $700 million per day, or $255 billion annually, was determined by Coinmetrics by subtracting the number of non-economic transactions from the Ethereum blockchain. This can be contrasted with the $3 trillion in annual economic transactions that Bitcoin actually processes. Bitcoin outperformed well-known card networks like American Express, $1.3 trillion, and Discover, $0.5 trillion, in terms of payment volume in 2021. According to research by NYDIG, transactions with no economic value were omitted from the NYDIG report to prevent inaccurate reporting of such data. It is reasonable to presume that the other blockchains process significantly fewer actual economic transaction volumes than Ethereum, given that Ethereum is the largest smart contract blockchain and contains the bulk of DeFi and NFTs, according to defilama.com. Bitcoin as the store of value. Bitcoin, in the opinion of JP Morgan's global market analyst Nicolaos Panagirtzoglou and his team, may replace gold in the future. Bitcoin is frequently referred to as the digital gold and shares some of the same characteristics as gold, including its difficulty to mine, scarcity, durability, and lack of sovereignty. According to the investment bank strategist, the combined market capitalization of Bitcoin and gold may one day equalize because they both have the same use. But until volatility decreases, it's doubtful that the market cap of Bitcoin, held by institutions, will match that of gold. This is because volatility is so crucial to institutional investors' risk management. According to the most recent data, this has already started to occur. Bitcoin as the tool for human rights activists. Furthermore, human rights advocates from all around the world have frequently embraced Bitcoin as a financial tool. In their centers in Herat and Kabul, Roya Mahbub and her sister, who co-founded the non-profit organization Digital Citizen Fund, taught tens of thousands of girls and women the fundamentals of computing because it was against the law for most girls and women to establish bank accounts. They also created videos and blogs for which they have paid in Bitcoin. Or consider the case of Farida Naborima, a human rights activist in Togo who, for the first time in history, led large crowds of people into the streets to demonstrate against the country's authoritarian government in favor of a democratic shift. Her demonstration was met with harsh persecution. The Togo government froze the donations made by the movement's backers, which had been used to help plan the demonstrations and supply basic necessities. Until she learned about Bitcoin, they were forced to transport money to nearby countries and smuggle cash into Togo. Because the Togolese government's totalitarian regime was unable to capture any of the money, direct money transfers were possible. All markets will be impacted as it appears that we are on the verge of a worldwide recession as predicted by numerous illustrious organizations including the IMF, Goldman Sachs, and Deutsche Bank. The greatest investment will inevitably prevail as investors look for safe havens. It's crucial to realize that Bitcoin and crypto are two different things. Blockchains with smart contracts are here to stay because of how innovative they are and how they open up new commercial opportunities. It seems conceivable that Bitcoin will stray and follow its own course. The most important feature of Bitcoin is that it is fully decentralized, making it the sole means of exchange that does not require you to put your trust in anyone. This is a significant development in the flawed world we live in today. That's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!